Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate secrets. Today, we're diving into the Segall, Bryant, and Hamill Trust's annual shareholder report, and let me tell you, it's not as dry as it sounds. Think of it as the investment world's version of reality TV, complete with winners, losers, and a few surprise twists along the way. We'll see how their small cap value fund and others really performed. First up, the Segall, Bryant, and Hamill Small Cap Value Fund. This fund, which is like a treasure hunt for undervalued smaller companies, returned 13.33% for its retail investors. Compare that to the Russell 2000 Value Index, a common benchmark which only returned 8.05%. Not bad, but the Russell 3000, while that did even better at almost 24%. So what fueled this small cap success? Apparently, the industrials sector really stepped up, generating higher than expected earnings. But before we get too excited, let's not forget the sectors that didn't shine. The consumer staples and energy sectors actually detracted from the fund's returns because of lower-priced tire imports and struggled with the COVID recovery. It's a reminder that in the investment world, there's always a good year that was the worst stock. Now let's talk costs. For every $10,000 invested in the retail class of this fund, you would have paid about $122 in expenses, which was a 1.14% expense ratio. How does this all translate over the long haul? Well, if you had invested $10,000 in the retail class back in 2014, you'd be sitting on about $20,132 today. For most years, the fund underperformed both the Russell 2000 and 3000 indexes. The Russell 3000 index sitting at $32,604. Rev Group, ICU Medical, and Modern Manufacturing were key drivers of this fund's returns, whereas Goodyear Tire and Rubber and Papa John's detracted the most. Looking at the average annual returns over longer periods, the fund returned 7.25% annually over the past decade. This is from actively trading or portfolio turnover in the investment world. The fund has a portfolio turnover of 33%, meaning they replaced about a third of their holdings. And what was the fund holding? Its top 10 holdings includes VF Corp at 3.9% and Crescent Energy at 2.1%. Before we move on, a little behind-the-scenes scoop. The parent company of the fund's advisor is about to go private, which could lead to a change of control. However, for now, everything is staying put, no big changes planned for the fund itself. Let's switch gears now and dive into the Segall, Bryant, and Hamill Small Cap Growth Fund. This fund is all about finding smaller companies with serious growth potential. It returned a solid 15.60% for its retail investors. Again, the fund outpaced its peer index. So what drove that growth? The fund said it was the financials, industrials, and healthcare sectors with Natura, Credo, and Comfort Systems. But here's the thing, not everything can be sunshine and rainbows. The materials, real estate, and communication services sectors held it back, with Sprout Social and Atcor dragging down performance. As for costs, you're looking at $111 in expenses for every $10,000 invested, or 1.03%. And what has the fund performance been looking like in the past? Compared to the Small Cap Value Fund, the Small Cap Growth Fund has outperformed it significantly and sits at $28,026 compared to $21,772 of the Russell 2000 Growth Index. Similar to the other fund, Natura and Credo Technology Group were key, and the most attractive were Endava and Atcor. A portfolio turnover rate of 46% means more active management for the growth fund. Sterling Infrastructure was at the top at 2.1%, and top 10 also include Radnet and Ensigen Group. The parent company could go private. However, for now, everything is staying put, no big changes planned for the fund itself. Next on the list, we have the Segall, Bryant, and Hamill Small Cap Core Fund. This one tries to strike a balance between growth and value in smaller companies. It returned 11.88%, which was on par with the Russell 2000, but way less than the Russell 3000 at 23.81%. The fund tells us that industrials, information technology, and healthcare were key, with earnings better than expected. On the flip side, energy and real estate pulled down the numbers. Also, I want to point out Five Below was one of the bottom stocks in this fund as well, but at 0.74. The expense ratio, 1.02% based on a $10,000 hypothetical investment. Compared to the previous two reports, this fund has performed less, sitting at $24,510 compared to $32,604 of the Russell 3000 index. Modding Manufacturing (EMCOR) Group were key performers here, whereas Fox Factory and Five9 were the detractor. We see the 1-year at 11.88 and 10-year at 9.38. The small cap core fund had a portfolio turnover rate of 40%. The fund was led by its key holding at Sterling Infrastructure, Ensign Group, Glaukos Corp. The parent company might be going private. However, for now, everything is staying put, no big changes planned for the fund itself. Now let's pivot to the Segall Bryant and Hamill all-cap fund. This fund casts a wider net, investing in companies of all sizes. Their return clocked in at 16.85% this year, which underperformed the Russell 3000 index. The story here involves tailwinds from the information technology, financials, and industrial sectors. But there's always a flip side. Healthcare, energy, and materials were the sector anchors, bringing down the fund returns due to rising product costs. The expenses for the fund were at $97 for $10,000. $28,654 vs the Russell 3000 index, $32,604. Marvell Technology, Fair Isaac Corp were at the top. Mondelez at the bottom of performance. Total advisory fees paid 0.56%. 90% plus to the US. You guessed it, however, for now, everything is staying put, no big changes planned for the fund itself. Now for the riskiest part of the conversation. I am talking about emerging markets with their performance for the year at 13.77% against the MSCI Emerging Market Index at only 7.5%. Taiwan, China, and India stocks helped bolster this fund. This was offset by a detraction from South Korea, Brazil, and Mexico. And it cost you $148 of every 10K you invested. Not good. This fund is propped up by Taiwan Semiconductor and Tencent at the top, bottom being Endava Sprout. 88% turnover. They might be taking the company private. The end. Let's go over the Segall Bryant and Hamill International Small Cap Fund with a 7.65% return against the benchmark of under 2%. The success is thanks to the UK, Japan, and Italy stocks. France, Switzerland, and Finland did not go so well. You will pay $118 for every 10K. Underperforms. Lead by BPR Banca. They might be taking the company private. The end. The Segall Bryant and Hamill International Equity Fund saw returns of 4.49%. The financial sector, industrials, and healthcare bolstered returns as well as Marvell Technology. In comparison, the returns were taken down by those in healthcare and real estate. You will pay $97 for every 10K. They might be taking the company private. The end. The Segall Bryant and Hamill Global All-Cap Fund had good returns. 16.89 returned to 23.81 index. High performers Nvidia, bottoms are in healthcare. They might be taking the company private. The end. Lastly, the Segall Bryant and Hamill Short-Term Plus Fund had an annualized return of 5.19%, which did much better than a couple benchmarks they mentioned. Short-term bonds were the reason this fund had positive numbers. It was able to underweight US Treasuries and overweight corporate. They might be taking the company private. The end. Alright, that's a wrap on the annual report. But seriously, let's cut through the corporate jargon. Looking at these funds, I see some strong performance in certain areas, particularly in small cap value and emerging markets, but there are definitely signs of inconsistency and some real risks. The potential change in ownership hangs like a question mark. The funds themselves are diverse, but past performance doesn't guarantee future results, so be careful. The fees seem competitive. So is Segall Bryant and Hamill a good investment? Like most things, it depends on your risk tolerance and investment goals. Now it's time for you to weigh in. What are your thoughts on Segall Bryant and Hamill and their funds? Let me know in the comments below. If you enjoyed this video, give it a thumbs up, subscribe for more, and don't forget to hit that notification bell so you never miss an episode of Corporate Decoder. Until next time, stay informed, stay curious, and happy investing.